Hi, in this video I'm going to review round 5 results and hopefully give you some ideas of how to finish round 6 for our last round in the simulation. Now here is my practice game, and in the practice game I am going to do round 5 to give you my idea of how I would have done round 5, and I like to do this after you do your round because otherwise everybody just tries to copy my exact inputs and I don't want that. So and this is kind of continuing from last video. So here we see that I made 478 points, and I want to duplicate that. I want to make another at least 450 points next round. So here I'm just going to keep an eye on my profit margin, 63, 40, 28, and just give an idea of my market capitalization. My forecasting was much better. Operations investing had increased, and my revenues were up. So pretty good year. And then I'm going to look at, of course, you should always go to your assessment page and get some hints. And these assessment pages is what reviews your simulation and gives you an idea of how you performed against your peers and things you can do to improve your simulation. So this is the first place you should go to help analyze your results. Of course, your charts to look at, the marketing levels for each team. And these charts are a good way to kind of see how you're doing over time. And you can see here, this is earnings per share that I really was able to bounce back. And my forecasting was good, very good this round. So check out the industry, see what my competitors have done, review my financials, and go back into my sales. So here in my sales page, and I kind of ran through this, I guess, last round where I have my inputs here, where I'm trying to beat my profit margins from last round. So the overview, I was on the gross, I was at 63. So here I'm making sure that everything is above 63 on my profit, and that my forecasts have been adjusted to take advantage of the new year, because we know that sales go up every year. Okay. And remember, answering these reflective observations helps you think about what you've done, the results, and how you're going to improve. So this is really critical to improving your gameplay as well. Okay, so then in marketing, I have to fill out the marketing. I see that the marketing ranges have increased a lot. As the industry gets bigger and we sell more cars, of course, more money is going to be spent on marketing. And I don't want to spend too much on marketing because that could lower my operational profits, but I don't want to not spend enough because then it won't support my sales. So let me take a minute to fill this out, and I'm going to head over to production. So just because this takes a while, because I have to look at the user guide, and this is not something you can fill out in 2 seconds. So I'm going to pause it so you don't have to wait for me. Okay, so now I'm in my production here, and I'm going to have to spend some money to buy some production plants. Last round, because I had excess inventory and I had enough production plants, I didn't have to spend that much. But this round, I'm spending quite a bit of money on the production plants because sales have ramped up faster, and usually in the later rounds they do start ramping up faster. 39.86. Okay, and you always want to make the excess shortage at least 0. All right, and I want to really ramp up my spending on my operational investments here because this is key to keeping my company productive, and I have enough cash now and generating enough profits where I can afford it. And I want to go, this will help me start year 6 really strong with a reduction in helping reduce the cost for my cars. So I spent a lot of money here. Let's see what the damage is on the finance page. Okay, so on the finance page here, I still have a pretty hefty surplus, which is good. So I'm going to use that surplus again to pay down my debt. I can't pay it off completely because there are limits on that, but I'll pay off what I can. Let's see here. I'll pay off, buy back some stock. Okay, so I'm ready to process my game, and I've already gone ahead and checked using the in the overview. All these financial ratios are backed up in our textbook, so I went ahead on the finance page and I calculated some of the my information on my ratios, and I see that my ratios are actually doing pretty good. So I expect to do pretty well this round as far as my points go. So I'm going to go ahead and process the round and see how I perform. Okay, so now I am in round 6 like you guys, and I see that I got my 450 points that I was hoping to get. And I did that because I increased my profit margins. And this is something that I keep saying over and over, and I keep seeing teams that are still around 40% or some teams below 40% profit margins. And by round 6, you should be in the 60 percentile, and I'm hitting 70%. So I increased my year over year profit margins by 10%, and also my operating profit margins by keeping a conservative marketing budget, and my net profit margins increased as well. So these profit margins helped me to increase my return on equity, return on shares, earnings per share, return on assets, market capitalization, book value. So all of that's increased. Now, my forecasting has gone down a little bit because I guess I was trying to be a little aggressive in my forecasting, but not aggressive enough because the market is really growing faster than I anticipated. However, ending the round at 463 points is really decent. So now I have my last round to go to. So if I go into my last round, of course, I'm going to review my assessment. I'm still doing bad in revenue. I got to step that up and look at my charts, industry, see how the competitors are doing, and then back to finance. And now I have a $1,200 cost reduction because I put so much money in my operational investments that when I build my cars now, so let me just put a sample in. I can actually probably make better cars here. Okay, yeah, so now my profit margins are getting close to 80,000. So this is good. So that investing in the operational investments, it has paid off pretty well. So now I can actually start building cars with better features, or at least get in the range there and get, work on getting my profit margins. If I left off last round at 70, I'm going to shoot for 75, 78% gross profit margins for round 6 if I can get to it. And I was able to do that because of my operational cost reductions, giving me a $12,000 reduction on the build of my cars. So that's going to be important to keeping my cars profitable, So do some tweaking here. This is a little stubborn. There we go, 69. That's 70%. I do want to get higher than that. It's kind of hard on some vehicles. So other vehicles, it's a little bit easier. So if I go to like my luxury here, I put in some numbers for luxury, just trying to see how high can I get this. I can get to 70. All right, so it is even, so I'm going to have to tweak this because I have to at least, maybe I can get at least go from 70 to 75% in my profit margins for round 6. So I'm going to focus on my profit margins for round 6. And I see the marketing budgets have gone up again. In production, I have some leftover inventory. Very important, don't think that's a smart idea to go reduce your operational investments in year 6, thinking you're going to save money and it's going to help. It won't help. It actually will, you could reduce your points in operational investments because you're reducing the amount invested. You don't want to go negative in this. That would be, I would say, a bad thing. So leave, if you're at the full 10s, leave them. If you're not, make sure that even though you're not going to a round 7, you still want to max these out at 10 in round 6 for every category, because you do get points in the overview page for increasing your total investments in the company. The idea here is that analysts look at a company and they say, are they investing for the future? And you're going to get points for investing for the future. So if you do have any more room to invest in operational investments in the last round, you should do it, even though you're not going to go into a round 7. It's still going to help you point-wise to spend some more money in this area if you haven't already maxed it out as yet. All right, so let's look at the results. So that's some of my ideas for finishing out round 6. So let's see how everybody did for round 5 in the simulation. So here's the online class, and we see here in the current round points, we have 682 points for Maris Corporation, which is good, very good. And we have anything over 400 points, I think, is fantastic. So we have 1, 2, 3, 4, 5, 6, 7 teams that did fantastic. And then we have a number of teams here that didn't do as well. And Biggest Auto is not doing well. In fact, they failed to even input their information. So that's a problem. You got to make sure that you're not missing any rounds and not ignoring the simulation, because it's going to hurt you in points. And if we look at gross profits, we see, again, a lot of teams are still in the 40% range, from 40 to 49% for gross profits. That's not good. You started at 40%, and you see how my team's already was at 60, 70%. You want to start shooting for 60, 70%, especially in this last round, and get those profit margins up to help your company. So here, these teams with the 41, 40, and 40, you've made no progress. Your cars really haven't made any progress. Your company is standing still where everybody else is moving forward, getting more profits, more sales. And you can see that reflect on stock price, where the teams with the stronger profits are getting higher stock prices, and higher stock prices equal higher points. Okay, so return on equity is really good for some companies. Above 25 is decent return on equity. So total points. So we have a number of teams here really close to the 2600. They're gonna get that full points for the class, and some teams really suffering. So you have one chance left to turn this around and salvage this simulation in your total points. So make sure that, I'm saying a lot of stuff every turn, every review. I keep saying increase your profits, invest in operational investments. And I see a lot of teams, they're not listening, they're not watching this video because their profits are going down. They're not reinvesting. They think they know better than what my suggestions are, and they're not following any of my suggestions. I don't think they're bothering to watch these videos, and that's really hurting them. So I don't know why they wouldn't take the free advice. Okay, so operating profit margins, one way to get this up is not to over advertise. You want to advertise enough to get your business, but if you get a lot of excess demand that you're not meeting, you may be over advertising and wasting advertising dollars. Okay, and earnings per share can greatly be helped by, of course, making more profits, and also, buying back stock can help that. And that's why a lot of companies do buy back stock. And return on assets you don't want to overspend on your assets. You get the assets you need to run your company, and you don't buy extra, meaning you don't buy extra production plants if you don't need them. You try not to have extra inventory. So try to sell exactly to your forecast. Don't pad inventory, because that's building up your assets and hurting your return on assets. Okay, your net profit margin can be helped by reducing the amount of money you've borrowed. By paying back your debt will help reduce the interest expense, which is the biggest drag from operational to net profits. And of course, you want to maximize your sales. So, to do this, you want to look at, the industry page and your competitors to see what your competitors are doing and how they are, managing their revenues, and where they're at, what they're selling the car, and what their demand is, and how they're building their cars. Okay. So that is the online class. I'm going to go back now, and I want to talk about my other section, because they watch these videos too now. So I'll just talk a little bit about the in-class section on Tuesday night. There's more teams here. So again, we have a bigger range. We have a huge range here of 700 points for Awesome Cars Did Awesome. And we have a good, almost half the class with above 400 points, which is fantastic for this round, doing very well. And I have some teams down here some of these teams down here, again, forgot to submit the round. They're a team of 3 or 4 people, and they did that thing where they said, okay, you know what, Jody, this week you're doing it, and Frank's going to do it next week. And you know what, guess what? Jody forgot to do it, and the round wasn't completed, and now everybody in the team's suffering because you're not taking personal responsibility as a team member to make sure the team succeeds. And that's a problem. Now, the company down here and with the negative points, again, they're going the opposite direction in profit margins. I had said get your profit margins above 40%, and if we look at their gross profit margins, we see that they're at 22%. And you need to be above 40. You should be in the 50, 60 percentile range. So again, this is an example of a team who's obviously not watching these videos, who's not hearing me say you have to increase your profit margins, who isn't hearing me say in class, finance and business is about maximizing shareholders' wealth, which means maximizing profits. So, but on the good side, we have a number of teams in the 50% and higher bracket for points, and a couple of teams even touching 70%. So this is really good. You want to keep that momentum up. Try to move up 5 points on your profit margins, maybe 10 points if you can. The teams down here that are still in the 40% range, or even below 40%. So 40 is where we started at. So these teams only made slight progress in increasing their profit margins, which is not keeping pace with the industry, and that's why you're not doing well in points. And these teams are actually below where you started. So how do you face shareholders 5 years later and say, hey, it's been 5 years, we've been managing this company for 5 years, and we've deteriorated our gross profit margins. We haven't made any improvements. We've gone nowhere. So this is not pleasing investors at all. So you really have to work on it. You can see the range of stock price from, from 120 and above, we have number of teams, and we have number of teams who actually are below $60 and below. So that's not good for investors. And you're doing these teams down here, 75% of everybody who's played the simulation has done better than what you're scoring here. And that's, I believe you're better than that. You're better than 75% of, you shouldn't have 75% of the teams doing better than you. I think, you can do much better than that. So return on equity is doing good here. We want anything above 30% of return on equity is good. And that just means that you are earning profits, and your profits are helping the equity, the amount of money shareholders contribute to the business to make profits. And if we look at total points, we have a couple teams here. We have 3 teams that already scored an A for the project. That doesn't mean you don't do the next round, because you could get negative points. So you want to keep up your momentum and make sure you lock in these points here. And I have a number of teams that are 2,300 points and above, which means you're pretty much a sure thing for getting an A in this project. But I have a few teams down here struggling with very low points, and that's going to hurt you. So you want to do the best you can. And the good thing about the simulation, if you're coming off a bad year and you do really well in the last year, you can earn a lot of points and help salvage your grade. So it's not too late. It's not over. You can still definitely push that back up. Operating profit margins, again, these should be at least above 30%. And a lot of teams are. And the thing that hurts people the most in operational profit margins is over marketing, spending too much on marketing. And our earnings per share, we have a range between 41 cents to $23. So if you're an investor and you say, listen, these are all the companies I could invest in, and for 5 years, these companies have really generated not that much in earnings per share. These are the companies I want to buy the stock. I want to buy the stock of these companies because they're over $20 per share in earnings. All these companies started with the same resources, the same environment, the same business environment, the same market. And some companies have done very well in their earnings per share, and some companies have done less. So your question should be, why? Why am I doing not as well as some of the other companies? That takes research. You got to go in the industry page. You got to go in the assessment page. You have to do the research to figure out what are other companies doing that I'm not doing that is holding me back. And I can tell you right now, you're not maximizing shareholders' wealth. You're not building profits. You're not building earnings per share. You're not building your revenues. This is what excites investors and gets the stock price to move up. It's the same thing in the real world. That's why I like this simulation. A lot of it is very real world based on how company stock prices move up, how the decisions that managers make affect the value of the company, and the overview page is very close to what analysts really look at. And the same thing, return on assets. Your profits, how many profits are you generating from the assets you bought? So if you're generating a lot of profits on a very lean base of assets, you're going to do well here. And again, you want over 35% in this category at least. And then your net profit margins. We have a range from 1%. 1% is like a supermarket. And auto companies should be much higher. And these, at least over 20% for your net profit margins. And for sales, we have some teams in the high, 80% and higher, meaning you beat 80% of the people who played this simulation, which is over 5,000 different teams. And then we have some people much lower. So overall, majority of the class is beating 75% of the teams have played this simulation in revenue. So revenues people are doing pretty well, and it's the profits you have to focus on. Okay, so that's it for my review, my 20-minute review for this latest round. And we see that we have a host of teams doing well and a host of teams not doing so well. And you have to figure out, just like a regular management team, if you're one of these teams not doing so well, why is that? Because we could see that here. I'm trying to resize this. Sorry. Okay. We see that here that this is profits. Profit margins have gone up for most companies. Some companies are lagging though. we see that points have been stabilizing around the 500, 600 level for most teams, and that people have been making this as stock price. Stock prices have been going up for most teams. Some teams are flat. Some teams are behind this in this backpack, and some teams, this one team is consistently ahead in stock price. These two teams, 3, 4 teams doing very well. And if we look at sales, these companies that are flat, these are the companies that didn't care to even enter in the information and submit their round. I actually went in and checked, nothing was entered. So why are you giving up on this project, this simulation, especially when you're a team of multiple people? And some people have rebounded quite nicely, doing very well, moving up. And we have, from last round, we have three or four new companies in sales doing almost $1 billion, getting close to the $1 billion mark, which I'm sure they'll hit next round. And earnings per share, you see these companies are stagnating here while these companies are increasing. And we have a new leader, earnings per share, Awesome Cars. And that's the way it's done. So that is my 20-minute review of the latest round. I wish you the best of luck in completing round 6, and I hope that everybody can get the points that they need to get an A in this project. And again, the reason for this simulation is to tie you in a little bit closer to how a company works, the decisions that companies make that affect the finances, that affect the financial statements, how pro forma financial statements are a valuable tool that we covered in class, how financial ratio analysis is important, year over year in industry analysis. So this really helps to tie you into how real businesses use finance to help manage their company. So this is how, hopefully, if you don't have experience being a CFO in a company, this gets you a little closer to what a financial manager needs to worry about, and how the running a company and the impact of competitors in the marketplace affects your financial results, which affects your stock price, which affects your job. So this is a very important tool to help tie you in and give you some sort of experience of what all this finance stuff we talk about in class, how it matters, and how it relates to the real world. Okay, so I will see you in class. Take care.